Right, boys. So this video is going to literally be the perfect video that I would have wanted to watch when I first started out trading. Like, if I had this video, my journey would have been so much easier. I would have gone through so much less pain. And I'm going to basically run through what trading is without any bullshit. Um, the strategy that you need to use to trade, why you need a strategy, open up your first trading account, and then a little bit of a mindset piece at the end, boys. So we're literally going to dump straight in. This is how we roll. What is trading? Trading literally is gambling with an edge. So if you're from the UK or from the US, wherever you're from, if you've ever betted on sports before, say you were betting on a football match, UK football, like say you were betting on a Chelsea Arsenal game, but you knew that Chelsea were going to score the first goal and certain two players were going to get injured, you would have an edge over all the other people that were betting on the game. And what trading is basically getting a data on a thing called a strategy, which is what the edge is, which is like that little tip that analogy I just made with the football. And we've got that edge and we've got the data of that edge, so we can see how that edge plays out over a long period of time, and we trade that edge. And that is how we are managing to extract money from the market without just gambling like the rest of the people that are participating in the market. So what that brings me on to is how the fuck does that shit work? So when you have a price of something, say it be gold or the Nasdaq or a forex exchange like the euro US dollar, the price will move up or down, and it could be down here. This could be say 1, and then this is like 2, and then it goes up to 3, it comes back down to 2, then goes up to 4. And how us as traders can make money is we can buy or sell the market. What that means is we basically make a bet on whether the price is going up or the price is going down. So if we were making a bet on the price going up, we would say it was around about here. We would take an entry into the market, which would be our little black line here. This would be our entry, and then we would set a certain price point where we are out of the trade and we're going to lose. So we would say set it underneath here, and then we would set what's called a take profit level, and we would set that up here because we think the price is going to come up to here, and this is what's going to take us out of the trade, out of the market. And then as we can see, we've entered here, we are going down, we're losing a bit of money here. Then our bet is going up and up and up and up, we're about to hit the take profit, then boom, it comes down and it hits our stop loss level, so then we lose the trade. And if we were to take a sell position, so betting on the market going down, we would enter, say up here, we would put our stop loss maybe above this high, and then we would put our take profit level down here, and then boom, look, we get entered into the trade here, we're betting on the price going down, so then it goes down, 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 boom, we take profit. And this area here, which is the risk area, what we like to call this is R. So R is basically just one of the area that you're risking. And what that basically does is makes it so in this specified area that we are actually losing the trade, we would always have a fixed amount as our loss. So if we were trading an account and say we wanted to risk 100 on every trade, we would risk 100 on the stop loss, and how we would record that is 1R. So if we won the trade here and the trade won us $300 here, so we entered the market up here and then we came down here, we made $300, that would be 3R. And it basically just is a multiple of what you've risked. So 1R basically just means one risk. So if we lost a trade, we would be at minus 1R. And if we won a trade, we'd be up 3R. And that is how trading, buying and selling works. Now, if we literally just go onto a chart, there is so much data that can be extracted from these charts, and there's so many ways that people can make money on it. And what you need to make money on a chart is a strategy. And the one thing about strategy that I found is there are lots of different types of strategies, and the two main types are discretionary models, which basically means that you actively make different decisions depending on what happens in the market in the day, and that information gives you feedback, and then you'd make a calculated bet on what's going to happen. Or there is what's called mechanical, where you have a fixed set of rules and you just execute the trade once that fixed set of rules have been met. And that is the type of trading we do, because it's a lot more easy and a lot more stress-free. And the model that I personally use is the tap and barrel full mech model, and this is created by Berg Trades. I will put this video sort of playlist in the description. It's a whole guide on the intricacies of this trading model that I'm going to be teaching here, and you can basically sort of go more in depth with it through that. Definitely also join the Discord in the description, because you'll get a lot of help in there. And all it really is a step of things happening on the market that you see. It should be step 1, step 2, step 3, step 4, then the final step. And all it is a 5-step process of executing things on a chart. And when you see these certain things, you then jump into a trade. So the first thing is what's called a fractal BOS. And on your trading charts, you have these things called indicators, and they're up the top here. And when you click in here, what you can do is search in fractals by Rachel T, and then select that, and then you'll get these triangles appear on the chart. So you'll get these, and these are fractals. And what you would do is you would look at all the recent fractals that have been formed. So these are the most recent fractals that have been formed, and you would have a little look and see, have they been pushed through. So we'll just take this first one for an example. No, the price hasn't pushed through this. But down here, look, boom, the price has pushed through this. So because the price pushed through it in a bearish direction, which basically just meant it went down, we are obviously looking for a sell. So we've got sell and buy, yeah? If we break through down through the candle, we are looking for a sell, yeah? So if I quickly take back the chart in time, yeah, to before this fractal happened, just to show you what it would mean if we were looking for a buy. So right here, we'd look at the most recent fractals. One's there, one's there, one's there. Boom. Draw the line. This gets pushed through. So we're looking for a buy, because we got pushed through up through the fractal, through the line. We broke structure to the upside. So that would mean we're looking for a buy in the market. It's as simple as that. That is how you find the bias. That is step 1 of the 5-step process here. So then step 2, all we do is we scale down onto the 5-minute time frame, and we look for a previous session sweep. So I mean, on here currently we are looking for a buy. So we would want to see the previous session get swept. So what that basically just means is the lowest and the highest point of the session before. So here, from midnight to 8 o'clock, we have what's called the Asian session. And then from 8 o'clock to 1 o'clock, we have the New York session. And what we want to see is the previous session level get hit. And if you want to have the lines that automatically pop up on the chart like I do, search that in TMB sessions high and low, and you can get that shirt. And here are the times for when we are setting up the markers. But if you don't want to draw the lines on the chart, you just want these little dotted lines here, search in that indicator and you'll be able to find them. So boom, we got our session sweep here. So on the 4-hour, we are technically still bullish because this hasn't fully formed yet. So what we would do is draw our fake out tool here. We get tapped in to the fake out zone. We'll go over that shortly. And then we do actually get tagged into a trade. It's a great example. So I basically skipped out all the steps there. And what I'm going to do is I'm going to quickly rewind it and fully break this down. So the highest and lowest point of the Asian session, because we're looking at the previous session for step 2, we're looking at a previous session sweep. Here we go, step 2, sweep. So we found our bias. We're looking for buys because on the 4 hour, we had that 4 hour break through one of these fractals. So now we're looking for sweeps. Yeah, we're looking for sweeps, and this indicator shows you the highest and lowest point of the previous session. So here, the lowest point is at 755, and we instantly sweep that level here. We instantly tap that line. We tap that level right there. So then what we draw out is the Fibonacci tool, which is up here in the settings, Fibonacci retracement. We draw that to the first up candle because we're looking for a buy. If we were looking for a sell, it would be the first down candle. So now we've got that on the chart here. We have now completed step 2, the sweep. So we've done the sweep and drawn the fake out zone. Yeah. So now step 3 is fake. Yeah. So all fake is you see this blue line we've got here. If I quickly draw a horizontal line on the chart here, boom, that is our fake out line, our fake out zone. All that needs to happen is that price level needs to be touched. So we're going to slowly play this out. Boom, right there. Step 2 of the trade-in model. Step 3 even, sorry. Boom, the fake out. So now all we're doing is waiting for step 3, which is BOS. So on the 4 hour here, we had our bullish BOS that confirmed our bias. We are now looking for the exact same thing on the 5-minute chart. So the exact same thing that we done on the 4 hour. Boom, we get one here, right here. That is our BOS. So that is our final confirmation confluence that we do. And what that basically means is that's the final thing we sort of look for on the chart. And that fib retracement tool, you might have just put, if you're getting keen, you might have just put that on your chart and it looks a bit different. This is the settings you need to be rocking on that shit. So load them settings up on the fib tool. So right here, boom, we now have had all of the steps, step 1 to 4, and now we're on to the final step, set limits. So what I spoke about before, the long and short position, we are now going to be incorporating that in on the chart now. So what we are going to do is we are going to use the same exact Fibonacci tool that we used for the fake out after we've had the break of structure, and we're going to take it from the lowest point to the highest point, which we've got marked here using this indicator, and we are going to enter our trades on the red lines of the Fibonacci. So we're going to be entering the trade here on this first red line. Boom. And then we're going to be putting our stop loss on the bottom red line. And then we're going to be setting it to 1 to 3. And then we're going to let this trade play out by itself. And we have no control on the outcome. So we don't know if it's going to win or lose. There we go, boom, it wins. So we make 3R if we risked 100, like the first example on this chart here. Like if we risked 100 here, we would have made 300 to the dome at the top of this take profit. And if we did hit the stop loss, we would have lost 100 down here. So that is exactly how to trade. That is the basics on how to trade and the basics on a strategy. So now it is back testing. And you might have noticed that on my screen here it says replay. So what you would do is you would go back in time and you would take all the trades that fit the model as far as you can go back. So if I look on here, look, we can go from 2025 all the way back, the whole year, can backtest the whole year, 2023. You can do this on TradingView. You can do this on Forex Replay, on TradeZella, many different platforms. And that is the basics of how to trade. So once you've got the basics of how to trade, then you would just log these trades. And how you do that is you would go onto Google Sheets, make a spreadsheet, and then you would just put month. So you would label the sheet. I'm on the Euro CHF here. So we would put Euro/CHF. We got the month. We got the time. We got model. We got session. We got result. Stack. And then a link to the chart. And then, for example, for this trade here, we would copy the link and we put that in link. The result is 3R. So we put that in there. It was in the London session at 10 a.m. London session, 10 a.m. And it was in May. And the year is 2023. So Euro CHF 2023, boom. And then that is how you would backtest. And after a significant amount of time of you backtesting, you should have something of this sorts where you just have loads of data and you can fill it out per month, and you can sort of make a bit more of an assessment on if that pair is good enough to trade for your model. So here, this has the R stack and the R. That is 39.65. So if we were risking 100 on every trade, we would be up 39.65. We would be up 3,965 for the year trading on oil with this exact strategy that I just showed you. So that is pretty much the basics of the trading and the strategy. So what I'm now going to go over is getting your first trading account. So what I'd recommend doing is using a prop firm. What this basically is companies that you can pay to do a challenge where you have to say make 5,000 without losing 3,000 for a 50k, something like that. And if you pass the challenges, then you get access to that amount of capital and you can trade that. If your strategy is profitable and over a period of time you know it can pass the challenges, then you can trade these companies and you can make a good amount of returns from payouts. So once you pass the challenges, you can take payouts on the account. So if you've got a $10,000 account and make $1,000, you can then withdraw $800 if they've got an 80-20 split. It all depends on the company. All the different companies have different parameters for their prop firm accounts, but Alpha, Capital Group, FTMO and TopStep are the three that I would mainly recommend to use and trust. So if we go on to Alpha Capital Group now, I'll show you how this works. So as you can see, I have active accounts here, 52,000, 10,000, 52,000, 102,000. All of these accounts are in the evaluation and verification stage, which means they are not currently live accounts that I can take payouts on. I have to complete a challenge on these accounts. So if we go onto this 100k here, you can see that I have 7,000 remaining on the profit target, and I have to trade for 2 more days, and I've got a maximum loss limit of 5,145 on the daily loss, and then my max loss is 10k. So that is how the challenges work. And then once you do complete a challenge, I currently have had a challenge get completed here, like verification success. You then get a email and a sort of certification saying that you've passed the challenge, and then that challenge, you then have to verify your face with your ID, verify some payment shit, and then you get access to the account. So currently waiting on access to that first Alpha Capital funded, but I'm still nonetheless waiting and firing on the rest. So that is pretty much it for your first account. Sign up to Alpha Capital Group, go on to add account, and this is exactly what I'd do if I was you. Just follow this exact stack here. So 10%, 10k account, C trader, bi-weekly, raw spread, and then in here put in the code 10k for 40. Move fast on this because this is ending at the end of the year, and this will get you, if you're British, it'll be about 30 quid. So 30 quid for a 10k account, not too bad, to be honest. So yeah, grab one of them, and yeah, that is pretty much it, boys. So for the mindset, I'm actually just going to divert you boys to another one of my videos, which is the AI framework that I've used to rebuild my life in about a month, and basically changed the way that I operate and the way that I do things. And all that is just like a quick accountability reset, and resetting your dopamine and focusing all your energy and your time on basically working on the drivers that are actually going to achieve your goals, instead of just fucking about and doing some random shit with every hour of your day. So if that is something you're interested in, have a little look on that video. It's a complete free guide with a template on the accountability tracker. So I hope you enjoyed. That's the Big Nez, and